One of the most interesting dynamics for 2020 in Brazil will be the deepening divide between the executive and legislative branches. Controllers expects the administration of President Jair Bolsonaro to increasingly struggle to overcome its minority status in Congress. As a result, major economic reforms face a credible risk of being diluted or delayed, even if most independent legislators actually share the government's pro-business stance. This includes, for example, the multiple proposals for tax reform currently being debated in Congress, as well as a government-sponsored bill to overhaul the public sector. Further compounding this trend will be the ruling party's focus on widening its support base in the October local elections, when Brazilians will head to polls to elect over 5,000 mayors. Bolsonaro's quest for a new political party also risks fostering more enemies than allies. As a result, we expect the business environment to improve at a much slower pace than many would have expected. Opportunities for investors, however, will continue to emerge via a string of infrastructure concessions and privatizations, most of which do not require legislative approval, as well as a reduction in regulatory risk across the board and amid a backdrop of modest economic recovery in 2020. Sectors such as retail are likely to benefit from an increase in domestic demand thanks to a combination of controlled inflation and record low interest rates. The government's initiative to open markets via trade liberalization is also likely to continue, though the implementation of some of these trade deals will take time to bear fruits. Investors are also likely to be reassured of the government's commitment to putting public finances on a more sustainable trajectory, even if debt to GDP ratio remains at relatively high levels in the short term.